Hello, welcome. My name is Ola, and welcome to my YouTube channel. I'm making this video about forex trading. We'll be teaching you guys little things about forex trading. I wish you best of luck as we dive into what forex is actually. So the first thing you are going to know is the history of trading. The history of forex trading came about before the modern currency were invented. There is something we call barter. That is I believe in that was taught in economics back then in grade classes. So bartering is just exchanging one goods with another. That is a valuable goods with each other then. But according to forex trading, the history came about. Bartering was a common way to buy and sell goods when there is no money. You understand? That is before the currency was invented, and that is to exchange them directly for the sake of mutual benefit. Like I said, it is for those goods that is valuable, that can yield valuable returns in futures. Understand? And so bartering, just like trading leader horns, was based on two main factors, which is products that are needed by others and negotiation between sellers and buyers. So what this actually means is that before you can buy one goods, exchanging your goods with another goods, that should be the goods with you should be the goods another buyers wanted to get. Like for instance, let's say I have goods and you have maybe you have silver. So for me to get your silver, I have to give you maybe 1 ounce of gold or 2 ounces of gold. So that's how it goes. You give me 3 ounces of silver for you to get 1 ounce of gold. So said over time, some of these items like precious metals or barely grains, yeah, it can also be traded for grains as well, like rice, beans, all those agricultural produces. Then they also bartering it then. So it became so easy to barter that used as long time media of exchange, and this is how the first gold and silver coins emerged in many parts of the world as it is. So give me a second. Yeah, I said as one of the first known metals since recorded history, gold has been a symbol of wealth, beauty and power. Gold has its own inner value that remains independent of authority or political regime. It is no wonder why until recent decades international trading was largely based on goods, or why it is being widely used as a means of exchange. The reason why gold is being used as a means of exchange is because of its value. And you could know then gold has been one of the most valuable metal used in the olden days before money was even invented. Let's say then even in the days of Egypt, like people use these golds to build a lot of things, to even graver their house, interior and exteriors, most of things. And this uses of gold makes its value to be independent even from political regime or political policy. You understand? And that is the only one metal is used for exchange as a valuable exchange in the olden days then. So that's just that about supply and demand. And basically, just as time goes on, we move to forex trading, and ever since the first goods and objects were exchanged between people many thousands of years ago, trading has been popular from buying and selling and even making profit. So when people know that this is actually giving them a lot of profit by fluctuating their own currency, they began to emerge what we call forex trading. And what is forex trading? Forex trading simply means foreign exchange. People call it FX, but call it forex. Forex exchange simply means foreign exchange, and the short form is forex. So and it is the largest financial market in terms of foreign trade per day. Yeah, that is in financial market. There are 3 types of financial market. We have stocks, we have the forex market, we have the CFD, and it has a daily turnover of $5 trillion since 2015 to date. Right now, it has the largest foreign trade of the day, and it is simply an exchange of one currency for each channel. So that's just a simple form of forex trading. This video is going to be short, and we're going to be explaining more about it. So, said forex in our day-to-day life transaction. We said, imagine this is just how forex literally means. Said you don't necessarily need to be a trader to participate in foreign exchange markets. Every time you travel and need exchange some money into foreign currency, you're participating in it already. So that's why I put this the short explanation that imagine that you have just arrived in Nigeria from New York, you want to buy a hamburger at the airport, but you have only United States dollar on you. How are you going to go about that? I mean, you come from USA to Nigeria and you have like maybe you have $10, and you know $10 you can use it in Nigeria. So how are you going to go about it? So you need some Nigerian naira to get your hamburger, unless you want to see Nigerian in an empty stomach. So you just go first to the exchange desk, which is, and mind you, forex trading is non-dealing desk market. That is, I'm talking about the exchange market right now. But when we're talking about forex market, we're going to know more about that. Forex market doesn't deal with, like we a trader online, as you all know. So, but physically, the way you trade forex, even without even putting your hand into MetaTrader for the thing we use, this is what I'm explaining right now. So you go first to the foreign exchange market, exchange desk at the airport, and exchange your US dollar to naira. Whether you believe it or not, this is the first step of what we call forex trading. That is just it. You understand? You are exchanging your US dollar with your Nigerian naira so as to get something. Wait a minute. No, something is just like you exchange $10, like I said, and you go back 4,575 kobo Nigerian naira. You understand? How is that possible? He said this is your actual exchange rate. We talk about the exchange rate right here. Then when we talk about let's go back to the history. He said since 1971, the United States abandoned the fixed rate. So since then, I said, and today most currency freely floating, and the price is determined based on the demand, like I told you. So as for you, as a Nigerian, you demand for Nigerian naira makes the exchange rate at that moment. You understand? The exchange rate of $1 for Nigerian naira then is what you're going to get. And you have $10 and you're getting $4,500. 500 naira means $1 is equal to 450 naira in Nigerian exchange rate. So that's just that. So said a few days later, this actual exchange rate is what makes you richer. Having $10 getting $4,000. That is from 2 digits to 4 digits or 5 digits, right? That is 5 digits. About 1, 2, 3. Yeah, about 4 digits. So becoming a Tanzania on 10 shilling currency on dollar. You understand? So but a few days later, you wave a goodbye to the statue of Awolowo in Abuja, just like taking a flight back to London. You exchange your leftover Nigerian naira at that place to US dollar again. Hey, what happened now? You see, you got less than what you expected. That is, if you have 4,000 naira, you spend 2,000 naira already, and you have about 2,005 left. Exchanging that to dollars again back in London, you're going to get maybe approximately about 4 point something dollars. So you get less, and that is what we call foreign exchange market. So we buy at the high price and we sell at the low price, and that is how we partake in foreign exchange market. So let's move to how money matters to foreign exchange market. He said the foreign exchange market we buy and sell currency. That's just it. We buy on the high price, on the low price, then we sell on the high price. That's just it. For that, we're going to know about it. So, and it is a physical market, like you just do right here, which is a physical market. He said you go to the foreign exchange market to exchange your money. So you make a move of the physical exchange market right there. But now in forex exchange market, you are not going to be in the physical market. It is going to be online through to make your money. And foreign exchange market is quoted in symbols, as you can see right here. We're going to know more about it. We have many types of currency markets. We have the United States, we have the Euro, we have the pound sterling, we have the Japanese yen, we have the Swiss franc for the Switzerland. The United States currency, which is the United dollar. We have the Eurozone currencies, which is euros. The 17 Eurozone countries based on euro. It's not euro, right? And we have the Great Britain based on their currency, pound sterling. We have the Japan, we have the Swiss franc. People can use their own currency as the Swiss franc, which is the CHF. So furthermore, we're going to know more about all this currency and how we can trade it today. And we also have the Canadian dollar, which is based on Canada. And we have the Australian, based on Australian dollars. We have the New Zealand, based on dollars. And for us also to forget our country as well, we have Nigeria based on Nigeria Naira. So that's just that we code our symbols. You can see we have the euro. The euro is for the euro countries, which is EU, that is EUR, and United States dollar quoted in USD. So that's just about it. And we also trade in PFs, and this is the PFs. You can see euro slash anything slash is PFs. You can see euro slash US dollar. So that's just that about it. And how do we buy sell in currency? Yeah, let's say you want to buy. Let's mix these pound USD, GBP USD, which is the trade with British pound as the example. Let's say you want to buy GBP USD. If the GBP USD goes up in value relative to the US dollar, once the trade is sold, you have to make a profit. That's just it. All this means that speculating about one currency, is going to go higher, and if you have this kind of a pair, pound USD, that means you wanted to buy this currency. You are buying the first currency. If you buy the first currency, that means you are selling the second currency. How? It is just very simple, like buying this you are selling this, and when you buy this one goes up, this one comes down, because this one, the GBP USD is going to be stronger more than the US dollars. I'm going to show you chart about this as well. I think when you are buying this currency, you are speculating that GBP USD is going upward, then the US dollar is coming down. You understand? So I said a trader in this example will be buying GBP and reselling USD at the same time. As an example, if the GBP USD pair was bought at 11300 and the pair moved up to 11504 at the time that the trade was closed and exited, the profit on the trade will be 204 pips. It's just very simple. All these are just forex jargons. Pips means the movement between for a period of time, the movement between a price for a period of time. That's just that about pips. So that's just that about forex trading, and I wish you best of luck about this as you wait for another episode coming up from me. Thank you very much. My name is Ola, and I am from Seed FX Institute. Peace.